morning, everybody, or good afternoon, depending on where you are around the globe. My name's Ian Coleman. I'm going to be your host for the next 30 minutes. The title of this educational webinar is The Morning Routine, What's Hot, What's Not. So basically, what I do on a regular basis, I start work between 6 and 6:15 on a daily basis in the morning, clearly. I then look through charts and normally have a watch list already prepared, what I'm going to be looking at for the day ahead, the sessions ahead. And it's basically how I get to my trade plans, what's driving the markets, what chart formations are there. Am I mid-sequence? Am I trying to counter trend? Am I trending? So all these different thoughts that actually go through my head or my brain every morning when I set up to work. So what we're actually going to talk about is preparing a watch list or finding a watch list. This will include a lot more than gold, as you'll see when we get to that stage. We're going to talk about chart formations, head and shoulders, wedges, Elliott waves, cipher patterns. We're going to talk about why they're so important with regards to trade setups. And also when we talk about cycle analysis, so again, big picture, is it just a counter trend? What's the monthly chart telling us? What's the weekly chart telling us? You know, we've been talking about gold, or we talk about gold a hell of a lot. You know, the monthly chart always had warning signs that we could have a topping pattern. And now we're seeing this mix of volatile price action as the market moves in both directions, both bulls and bears fighting each other at the moment. We're also going to be talking about patterns. By that, I mean candlestick formations. We've got the potential of having an evening doji star on one of the major stock indices at the moment. It's a reversal candle formation. It shouldn't be ignored. Drivers, what's driving the market? So obviously we've woken up to a Trump victory, high volatility overnight. Looking at the economic calendar, you should make that one of your stops in your morning routine. And also, I mean, I probably look back at the economic calendar, the FX3 economic calendar, obviously, at least twice daily. Because if I'm seeing setups, and you've got to remember, I look at swing trades. So if I'm looking at setups, I also want to be saying, well, how can that come about? You know, this week we've had presidential elections. So, you know, we've had that strong breakout in dollar yen, and we were lucky enough to catch that. So that was the driver that's pushed that higher. We're seeing stock indices move higher on the back of this presidential win, because it looks like he's going to be dominating most of US politics going forward. So that's been the driver. I'm 90% technical, but I also understand that news moves markets. So we do need these data releases, if you like, to push currencies, commodities, stock indices strongly in one direction, and that's what we're looking for. So we're going to also cover DeMark indicators. I'm not going to go into that in depth, but when we look at one of the setups that we're going to be talking about, I want to highlight what DeMark is saying as well, because DeMark can be a great add-on tool for confirmation or not of whether or not you're trending, whether or not you should be looking for a strong move in one direction, or whether or not it's going to be corrective. The reason I particularly like DeMark indicators, and have done for a long time, is because I'm going to put my speaker a little bit closer, see if that helps. Is because institutional traders use it. Okay, so institutional traders dominate the markets. They're the ones that are pushing it strongly in one direction or not. So you should be using the tools, or at least looking at some of the tools that institutional traders use. And also DeMark is programmable. So obviously, I think 70% of all FX trading now is done by computers, CBOTs, etc., AIs, and DeMark indicators can be easily programmed to execute trades automatically. So we're going to talk about setups. Most important thing, risk reward, and that brings us back onto chart formations that we're going to talk about. Where do you put your entry level? Where do you put your stop loss? Where do you put your target? And chart formations, a lot of chart formations give you that information, and you've got to know which chart formations give you that information. Cipher patterns, head and shoulders, wedges, etc. Trend or counter trend we've already mentioned, and then correlation. Something that's overlooked quite a lot, especially by novice traders. You know, if you want to be trading gold, going back to gold, even though I said I wouldn't, if you want to be trading gold, you know, what are the other dollar denominated products doing? You know, if I want to be trading euro against the US dollar, what are the other euro products doing? What are the other dollar products doing? Is there scope for strong moves in either direction? So just to go through our slides. So the morning routine, what's hot and what's not. Gone too far already. I'm good at this. Let's start the slideshow again. So my name's Ian Coleman. Most of you will know me from the FX Premium team. I've been in the market 37 years. Every time I seem to do a slideshow that goes up, which is quite frightening. I've got an FTA diploma, which is the Society of Technical Analysts. It basically means that I can plot charts, etc. I was doing this a long time before I took the STA exam, and it was more as confirmation with the company that I used to run, that we actually knew what we were talking about, and it gave our clients a bit more confidence in what we were doing. So I'm a part of the FX Street Premium team. We offer exclusive, reliable analysis, trade setups, educational video. We've got Ross, who's there offering his trading system. We've got Khalid, Yohei, Gil, you know, all offering technical analysis, some specialising in fundamental analysis. I'm a part of this team. I'm very proud to be a part of the FX Street Premium team, because I do believe that there's so much knowledge there in different areas that you use to your advantage. And that brings us on to instant expert advice or access. So you can ask us any questions at any time. Met a lovely young lady at the London Traders Show last week, and she said that even though she'd been a member for quite a long time, she doesn't really ask questions. And the reason being is because she thought that some of the questions might be regarded as being a bit silly or daft. There are no daft questions. You know, we're there to educate. We're there to help you. So please, you know, even if you're just starting on your journey, please do ask as many questions as possible. And then to improve your trading instincts, which is all it's about really. Keep on learning, keep on educating yourself. I continue to read books about technical analysis and mind behavior and risk management, etc., etc. At the moment, we've got a Black Friday offer on. It's up to 75%. If you scan the QR code, you can get the promotion. And that is the end of my very quick slideshow, because obviously we want to get to the charts. So what is my first port of call? Well, if we go here, and this is the trading studio for premium clients. Here we've got the economic calendar. What I normally have is I'll have it on a 1 week view, because I don't want to see just what's coming out, but I also want to see what has been driving the market. And obviously, overnight, we've had the US presidential election. But yesterday we had an RBA. Okay, we didn't get much of a move there. We actually had, or we were looking at an Aussie-Swiss trade setup. My belief was that it was going to either get triggered or not, with regards to the RBA monetary policy. What I didn't see was really, it was a risk on trade. Aussie-Swiss, obviously buying Aussie, selling safe haven Swiss as stock indices move to the upside, and that's had quite a good move. Am I disappointed that we've missed it? It was quite a good entry. Not really, because we did have a setup for dollar yen, and dollar yen is basically the same product. It's a risk on product, and we've seen that move to the upside. So obviously yesterday ISM, etc., 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 and then tomorrow we've got the Bank of England. So you need to be aware if you're trading any sterling products. And then obviously later tonight, tomorrow night, sorry, is the Fed. So obviously going to affect gold, dollar products, etc., etc., etc. So let's get to the charts, and I'm just going to talk about watch lists. Okay, this is my watch list on the right hand side. I think there's something like 55 products in there, okay, ranging from currency crosses from the 8 majors, okay. I'm not looking at Turkish lira and stuff like that, okay. So I've got all the crosses, I've got stock indices, I've got US 10-year, I've got DXY, I've got commodities, okay. That is plenty to look at. Why people will just concentrate on gold, and I do ask people, and they say, well, it's because it's, everybody trades it, and it's because it's I can get good leverage through my broker trading it, etc., etc. If you're a swing trader like myself, you could be waiting for days, weeks, even months potentially, for a trade setup. And because of that, I look at multi assets, and when you scan multi assets in the morning, you will find some trade setups. Okay, if you're just looking at gold, I mean, we did a gold report this morning. We were talking about this trend line in the top left hand corner, and then we've got this reverse trend line. So all that's happened is held one and held the other, and you're getting chopped up in the middle there. And there's really sort of two views going on. What I'm going to talk about is basically breaking down all these time frames and getting a view, and basically saying, do I want to be involved in that asset? Can I see value? Can I see a decent risk reward setup? Where is supply? Where is demand, etc.? So just to walk you through the charts, this chart in the middle at the base is the monthly chart. This is the weekly chart. This is the daily chart, top left-hand corner, 8 hour, 4 hour, and hourly. And why do I want all those different time frames? And I've got a wide screen. So if you're just using, looking at the same setup on a laptop screen, it's going to look quite tight. Okay, this is the wide screen that I've got at home, and I've got actually two wide screens, one on top of the other. When I do work away, I have to take a slave screen with me because I can't get enough information. I want to absorb all that information in one go. I don't want just 4 charts on there. I want all 6, because that's my watch list. And basically what I'm doing every morning is going through this watch list and looking for setups. Okay, obviously my concentration is on the majors. So I'm looking at euro, dollar, sterling, dollar, yen, all those top assets that we analyze first thing in the morning. Gold is a part of one of those top assets, of course. But if I want to be short of Aussie dollar, is there a better Aussie product to trade? Okay, I'm looking for the best trading opportunity. Just to talk you through these charts, I've taken most of the annotations off them, and I've just left these indicators on. And these indicators, I'm going to try and make it as simplistic as possible. So these indicators are supply and demand zones. So supply is red, so that's where the market has sold off from, if you like, and the blue is demand. And these are really important areas because price action gets attracted to these areas, and you'll often see when we're combining it with other technical indicators and tools that we will bounce off these levels. Okay, and we might bounce off from a third wave of an Elliott wave count. We might complete a bat formation down here, so something like this. So we come down, and we might even use that top part as the resistance level, and that adds confidence, if you like, to our analysis. So I'm just going to start just by sort of clicking through a few charts, if you like, and then I'm going to get on to silver, because obviously silver was one of the ones that we have done a trade plan on today, and I'm going to explain why silver is a trading opportunity as far as we're concerned. And also I want to talk about S&P, I want to talk about the Dow, okay, and I want to talk about dollar yen, how we came to the conclusion that dollar yen had scope to move higher. So when I'm clicking through these charts in the morning, and we can talk about this one briefly as well, which is Aussie Swiss, I'm basically looking for ending patterns. Like I said, I'm a swing trader, so I'm not in and out for 5 pips. I want to be holding on to trades for a couple of days at least, if not longer. I mean, Swiss yen, if that actually produces a sell signal, that's going to be weeks, if not months. So that's not something I'm going to look at today. So basically, what I want to be looking at is I want to be searching for reversal formations, patterns, chart patterns. Now, to me, the most important ones are ending wedge formations and head and shoulders. Sometimes an ending wedge formation will become a head and shoulders and vice versa. The reason that I like those patterns, and as we said earlier, why are they so strong, is because they give me an entry level, they give me a target level, which is all you'll see on all of these charts that we have which is measured move. Okay, that tells me where I can expect that product or that chart formation to extend to. And if I can get an entry and I can get a target level, then I can calculate a stop. And that gives me my R rate. And the R rate, as you know, which is risk reward, is the most important aspect of trading. So going back to this Aussie Swiss setup, so scanning the markets, looking for wedges, looking for head and shoulders formations, looking for Elliott wave patterns. Okay, the reason why I look at Elliott wave, I look at cipher formations, I look at wedges, and I look at head and shoulders, is because they all sync with each other. Okay, they all marry in. If I see an ending wedge formation, it is often at the end of a 5-wave count. If it's not at the end of a 5-wave count, then I'm probably in an ABC sequence. So then I can look and say, well, am I going to produce a cipher formation? And we've got all this building, by the way, when we get to silver. So it's using different time frames to analyze the big picture. Candle formations, chart formations, Elliott wave, blah, blah, blah. It might sound that I'm overcomplicating things, but I'm not. It's quite, this is actually a quite basic trade setup scenario, if you like. So Aussie Swiss. Okay, so this was the ending wedge formation. What I also find with wedges, I'm constantly trying to give tips on the way round, if you like, all the way through this webinar. Wedge formations are better off caught at the base and not at the breakout, okay? Because sometimes at the breakout, you'll often get a retest. Sometimes it'll break out and then it'll just pull back, and then you're moving your breakout line, if you like, so you'll end up moving it up here and up here and up here. Okay, if you can catch the base of the wedge, so in this case scenario, this is what I had analysed as a wedge. This was a measured move target, which is the start of the wedge, which is 58.22, and this was the base of the wedge. So this is 0.1, this is 0.2, this is 0.3, and this is 0.4. And what I've noticed is that a lot of the time, if you can catch the fourth wave or the fourth test of the trend line, and then it breaks to the upside, there's a good chance you're going to have picked a swing low. So four touches is what I really want to see. I want to see support, and I want to see target level. So basically here we got our 4 touches. This was actually a trade that we'd been in, so I got in around here and actually got stopped out on this spike lower, and that's why we were actually looking at getting in on wave 2, which is a retest of the breakout line, etc., etc. So this sort of scenario gives us an entry level. It gives us a target level. I actually think we're going to extend to the 261.8%, and then it gives us our stop, and that gives us our risk reward ratio, and that's basically all we're looking for. And you can probably hear my dog barking like crazy downstairs. So on a daily basis, and I'm not doing it every morning because I've probably done it the night before, I'm flicking through the charts. I'm looking for something that jumps out at me. Okay, I've got all these different time frames. You know, if I'm looking at Aussie New Zealand, and somebody might request an Aussie New Zealand report, what am I seeing? Well, I'm seeing nothing really. You know, why would I want to get involved in this when all I'm seeing is this sort of sideways price action, okay, on the daily chart? It could be a flag, it could be a distribution zone, which means we're just going to spike up and come lower. So there's nothing there. If I enter that trade, where is my stop? Where is my target? It doesn't offer a target. It doesn't offer a stop loss. It doesn't offer an entry. It offers nothing. So that's why you need to look out at all these different products to try and gain the best setup for swing trades, which is basically what I'm looking at. This was a decent setup yesterday. We mentioned it in the morning report. So again, just going back, quite simple this way to analyze. Okay, so this was the supply zone from 11th of October. If we go to the chart, so we're using the supply zone from the 11th of October, we've got this wedge, okay, that completes 3-4 touches, 1, 2, 3, call this area 4th touch. Okay, so we know where our entry is going to be. Okay, we know where our target is going to be. I always put the stop loss above the supply zone. So we've got a 5R setup. Obviously didn't take this one because it was going into the presidential election. It's a bit more of a coin flip than it normally is. But let's talk about silver. Okay, while we've come to the conclusion, if you like, that we're going to get a decent trade set up. And this is a typical format for me, if you like. So I'm not just looking at the 4-hour chart, I'm looking at the daily chart, I'm looking at the weekly chart. And I want to talk about DeMark indicators when we go to this setup. Okay, so I'm just going to flick onto DeMark. Again, looks really confusing. It's the same time frame, so we've got monthly here, weekly here, daily here, 8 hours, 6 hours, 3 hours. I'm not going any shorter than that. Basically, what you want to be doing when you're looking at DeMark indicators is you want to be looking at 9 and 13s. Okay, 9s and 13s highlight corrections and exhaustions. So this is the weekly chart. The higher the time frame, the more relevant it is. Okay, if you're looking at a 1 hour time frame and you've got a 13 count, yeah, you might get a correction to the downside, but it's probably not going to be a trend reversal. And keep on going back to this fact that I look at swing trades. Okay, it might be a good intraday setup, but it's probably not a good swing trade setup. What do we have here? Well, here you can see these little red arrows, or I hope you can see these little red arrows to the downside. They highlight the potential of a topping formation. So a 13 count on a weekly chart makes my mind go a little bit fuzzy. I'm getting a bit excited because there's a chance that we might be putting a top in place. And you've got to remember, silver and gold have been trending higher for quite some time, aggressively as well. Okay, we've also got a 9 count. Now, a lot of the time when you get a 9 count and you get a 13 count together, it adds to the weight of the signal. Okay, so 13 count is an exhaustion count. So it basically says the market is getting towards the point where we should be looking for bearish reversals. A correction, a 9 count is a correction count, which says that we should be looking for at least a correction to the downside. So I've got an exhaustion 13 and I've got a correction 9. So those double whammies, if you like, are telling me that I really should be looking at silver moving lower over the medium term. Doesn't mean I can't take a counter trend trade. Okay, so I've just put up here, I don't know if you can see that, 36.64, and that's just calculating the stop loss from this 13 candle, but that's another webinar. How to use DeMark indicators, you could go on for hours. So, but breaking down into a shorter time frame, and I'm really trying not to confuse matters here, I've got a 12 count on the 3 hour chart. So a 13 count, again, tells me that this sell-off can be coming to an end and I can have a correction to the upside. So the weekly chart tells me you've got to be selling. 3 hour chart tells me I can buy dips. Okay, so you've got counter trend. So when we said earlier, you've got to know which part of the cycle you're in. Are you counter trending? Do I want to see new highs? Do I expect to see new highs? Or is this just a correction to the upside? And then let's get back to silver. Okay, so breaking down the analysis. Okay, silver weekly chart, it's driving higher in this wedge formation. What do we have? We have a doji style candle at the top. We have follow through selling. Some analysts might call that an evening doji star. I'm not sure if I would. I'd be more likely to call it chopsticks, where you've got those 2 spikes higher that have been sold into. Anyway, it looks pretty toppy. So there's a chance that we can move within or hold within this wedge formation and then break to the downside and get to these levels over the medium term. This is a weekly chart. It's not an intraday chart. Okay, so breaking down time frames. The daily chart has completed. We've completed this crab formation. Okay, so the weekly chart is telling us that we've got scope to go lower. Okay, the daily chart is saying, yeah, there's a chance for a top to be in place. But what are we seeing? Well, we're seeing a stalling in price action to start with. We're seeing a really nice trendline support. If we count that out, we've got 1, 2, so 2 here, 3 here, 4 here. If we move that lower, we've got a wedge. We've got a measured move, which is 34, 54. So we've got a target level. What do we have here? Well, I've got loads of supply on the 4-hour chart. I'll go to the 8-hour chart. I've got loads of supply. Okay, so we always want to be buying from supply, and we want to be selling I want to be buying from demand and selling from supply. So we've got loads of demand down here. 8-hour, 6-hour, 4-hour, 3-hour charts will all be showing these blue bands which highlight support. Okay, so I've now got something that looks quite nice. Is it counter trend or is it trend? Well, the daily chart and the weekly chart have already told me that it's counter trend. I've got DeMark indicators that are showing me on a weekly chart that I should be really looking for sell signals, which means this is counter trend. Okay, but I've got that 3-hour chart highlighting that we're getting close to a 13 count. You're going to have to study DeMark indicators a little bit. To get a 13 count, it's going to have to get below this low here. So why haven't we already taken a long trade? Because I've only got a 12 count. I haven't got a 13 count. Okay, so we've got that swing trade lower. So I can then use the trend line support, use these supply and demand zones, and I actually prefer the bottom or the top of a supply or demand zone than these parts, basically. So I prefer the measure move area. Okay, and then I can start working out my risk reward. So I want to get in here. If it breaks, spikes lower, it might come back inside. So I want to give myself a little bit of room. I know I can get about between 5 and 7R on this trade setup. Okay, let's have a look at another time frame. So is this trend or is it counter trend? Okay, I'm expecting it to go a little bit lower. Okay, so into this area, and this is where my cipher patterns come into play. So suddenly we've got confirmation that this whole move higher is going to be counter trending. Okay, so breaking everything down, DeMark, chart formations, etc., etc., etc. And why is this important here? Because that's the measured move target. If we go back and use a fib tool, we just pull this over like that. A very common retracement level for the BC leg is either 34% of the AB or it's 88.6% of the AB, and that brings us straight to the wedge target. So just to sort of reiterate what we're looking at, we're looking at sort of starting with a blank canvas. But you know, if you look to this right hand side, you've got dollar yen, it's got a blue on it. You've got US 30, it's got a light blue. That means it's on my scope. Silver's got a blue because I want to be buying it. Euro dollar was an amber yesterday because it's on the watch list. CAD Swiss is an amber. There's not millions on the watch list here today. Normally there will be maybe 10 on the watch list of potential setups, and then looking at price action. Excuse me, 1 second. To confirm or deny what we're looking at. So it is a case of starting, or for me anyway, starting with a blank canvas, okay, and then working through support and resistance levels, cipher formations, Elliott wave, chart patterns. Chart patterns are the most important because the chart patterns, as I said, will give us target levels, will give us entry levels, and will give us stop losses, and from there we can work out our rate. So just start with a blank canvas. Don't put too many indicators on your charts. You don't want analysis paralysis, he says, when he's got loads of annotations on silver. But when you're looking at a trade setup, you've got to break down timeframes and look at bigger pictures. Okay, DeMark indicators will help you analyze whether or not you're your trending, your counter trending, whether or not you can have that sustained correction to the upside of a 13 count, etc., etc., etc. I've run past my allocated time. Have we got any questions? Will I be doing webinars often? We will during the course of November, and then probably onwards. I want to be doing one. I think there's one on cipher pattern formations, earning residual income from swing trading. So there will be quite a few through November, and then probably going forward as well. DeMark indicators. So DeMark indicators are, and I've overlaid something else on here, which is an outside bar. So I'll just get rid of that because I like outside bars basically. DeMark indicators are these numbers on the top and the bottom of the charts. There's a really good book which I mentioned yesterday in the chat by Jason Pearl, which is DeMark Indicators by Jason Pearl. It's published by Bloomberg. It's the best book out there with regards to working out DeMark indicators. There are a lot of DeMark indicators. Okay, there's some for trend lines, but the most basic one is TD sequential is called, and this is TD sequential. So basically what Tom DeMark did, and this is going back quite a few years, when he was first fascinated with the markets and before computers were really relevant, he used to plot charts on a daily basis, and he worked out a sequence that would happen more often than not. Okay, and that's the most important thing when we come to technical analysis. Wedge formations, what happens more often than not? Well, 70% of the time a wedge formation will break out and reach the target level, supposedly, if you probably found the right wedge. So you're looking for things that happen more often than not. A head and shoulders formation more often than not will break out to the downside. Okay, it's just repetitive. It's these sequences that keep on happening. So Tom DeMark did all these paper studies, and he found that if you got a sequence of higher highs and higher lows over a certain amount of time, then 9 was the magic number. Okay, so every candle to continue a bullish count has to open higher than the candle 4 candles before, and it has to close higher than the candle 4 candles before. Okay, and that keeps these sequences alive. When you get a 9 count, which you've got one here, what Tom DeMark says is after 4 candles, you should then see a correction to the downside. And luckily enough, that example, we see a correction to the downside, but they don't always work. There's a 9 count here, and it doesn't move higher. Okay, there's a 9 count here, and it picked the top. So sometimes it works and sometimes it doesn't. So again, it's more of an overlay than a trading system as far as I'm concerned. And if you're really looking at using DeMark indicators, concentrate more on 13s. So here we've got a 13 and we've got a 9 count, and you can see that's the top slot in the same time frame for silver, and it moves quite aggressively to the downside. Again, if you want to study DeMark indicators, then I'd recommend a book. How much time do you spend every morning to shortlist the potential setups? I've normally got them shortlisted from the night before. I mean, I've normally finished work about 3:34 p.m. UK time, but I always leave my PC on until I retire for the night. So I'll probably come back upstairs about 8 o'clock, spend 15-20 minutes scanning the markets, putting a few amber lights, if you like, next to products that are quite fancy for the next day. In the morning, I normally know what I'm going to be looking at, but then I'm looking at the calendar, I'm looking at what's happened overnight. So like I said, I mean, I start work around about 6 a.m. And don't really start writing reports until 6:30, maybe 6:45. So about half an hour probably. Just wait for Angie Trade to just typing. Yeah, correlation. I don't know how long you've been in the premium service, or even if you're in the premium service, but I often look at single currency charts. So these are basket charts that will show just sterling or sterling overlay. So it will take 7 sterling crosses and overlay them on top of each other, and it will give me a bias on what I believe sterling's going to do, or the dollar, or the Swiss franc, and then I'm looking at correlation. So I'd want, say if I want to be selling sterling dollar, I'd want most sterling products to tell me that sterling should be going lower, or I'd want most dollar products to tell me that dollar is going higher. Also correlation with regards to sort of, going back to gold, what's the 10-year doing, what's DXY doing, and again going back to correlation with regards to things like dollar yen. Dollar yen moves higher in general when stock indices move to the upside. So stock indices are moving to the upside. Do I see it's stalling? Not yet. So do we want to be cashing in dollar yen? Not yet. But also we're wary that the S&P 500 is against a trend line. The US 30, which is the Dow Jones, that's very close to resistance. So do we want to be greedy and try and bleed to our target? Yes, of course we do. But correlation suggests that we could be getting towards the top. So that's why we've trailed the stop loss on dollar yen this morning. I never look at 15 minutes and 5-minute time frames. I don't think there's anything wrong with it, by the way, if you want to day trade. But swing trading is a lot less stressful. The overall, that's a difficult one. If I've missed the entry, then I'll look for a pullback in wave 2. So that would be what I consider an overall swing. So I'm still looking at wave 3, 4, 5 to the upside. But I probably missed my entry because it might have been overnight. But yeah, we do try and catch tops and bottoms. It's not always that easy. Okay, guys, I've got to wrap it up. It's I've actually got an appointment with my wife to go and see a property, so I'm going to be leaving now. But if you want to ask any more questions this afternoon in the Ask the Analyst channel, then please feel free. Okay, many thanks. Take care. Bye.